Hi, this is Prashil, and you're listening to the Equity Masters Stock Market Wrap Up. In this week's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. We'll be looking at the US-China trade war's effect on India. We'll also be checking out the latest from the L&T Mindtree saga. India's trade deficit widens to a 5-month high. We'll be taking a look at that. Before that, a quick look at the broader markets. Global markets fell following cues from Wall Street, despite better than expected macro data from the US. Back home, Indian indices were volatile on the back of anticipated exit polls and the much awaited election results next week. With the markets out of the way, let's look at the key stories in focus today. America's year-long trade war with China is pushing US companies to source more from GSP beneficiary countries like India, Thailand, Cambodia, Indonesia, and Turkey. The Coalition for GSP, a group of American companies and trade associations, in a new report said that the latest official trade figures show that the Generalized System of Preference, or the GSP, saved American companies $105 million in March, an increase of $28 million, that's 36% from March 2018, and the second highest level on record. In the first quarter of 2019, the GSP saved American companies $285 million, which is $63 million more than the first quarter of 2018. The GSP is the largest and oldest US trade preference program and is designed to promote economic development by allowing duty-free entry for thousands of products from designated beneficiary countries. On March 4th, President Donald Trump announced that the US intends to terminate India as a beneficiary developing country under the GSP program. The 60-day notice period ended on May 3rd. Noting that imports from China, subject to new tariffs, are down significantly, the GSP coalition said that imports of products from other GSP beneficiaries have increased the most in the first quarter of 2019. According to the reports, India benefits the most from this. For India, 97% of increased 2019 GSP imports are on the China Section 301 lists, the one which have excess tariffs. In another report, the coalition said that cancelling the GSP for India would in fact benefit China. Referring to the results of a recent survey, the coalition said that 30% of companies would look to source more from China if the GSP benefits are done away with. Now, how it pans out and whether India's GSP benefits are withdrawn remains to be seen. Moving on, Larsen & Toubro, or L&T, on Thursday purchased 880,000 shares of Mindtree, raising its stake in the IT services firm from 25.94% to 26.48%. With its stake crossing 26% now, L&T is in a position to demand a board representation in Mindtree. The engineering behemoth is in the process of taking over Mindtree, with a plan to buy up to 66.3% of the shares in the company, shelling out northwards of 107 billion rupees in the process. This would be the first hostile takeover in India's IT industry. As per the reports, L&T, after buying a 20.3% stake jointly held by Cafe Coffee Day founder VG Siddhartha and two of CCD's associate firms, had said that it intended to buy an additional 15% from the open market and another 31% through an open offer. The open offer was originally proposed to open on 14th May and close on 27th May 2019. However, L&T was compelled to postpone his offer by at least a fortnight after the markets regulator sent the draft offer letter back to L&T with a set of queries on the proposed takeover. On 10th May, L&T submitted its response to the regulator. Irrespective of the open offer, L&T will continue to purchase Mindtree shares from the public during trading hours until it finishes buying the planned 15% from the open market. As per the reports, the combination of these two companies will help create an entity with a turnover of close to 120 billion rupees, closer to larger rivals such as Wipro and TCS. Moving on, in the news from India's economy, India's trade deficit widened to a 5-month high in April due to rise in crude oil imports coupled with muted growth in exports amid rising concerns over the US-China trade war. The trade deficit, which is the gap between exports and imports, expanded to $15.3 billion in April 2019 as compared to $13.7 billion in April 2018 and as compared to $10.9 billion last month. Merchandise exports inched up a mere 0.6% year-on-year, while imports rose by 4.5% compared to the same month last year. In April 2019, major commodity groups of exports showing positive growth include petroleum products, electronic goods, organic and inorganic chemicals, RMG of all textiles, and drugs and pharmaceuticals. Much of the rise in imports came from crude purchases, which rose by 9.3% to $11.4 billion. In April, the Brent crude price was $71.23 per barrel, as compared to $72.11 per barrel in the same month last year. Apart from crude oil imports, gold imports spiked 54% to $3.97 billion in April. The rise in imports by the world's second biggest consumer of the precious metal was driven by strong demand in the wedding season, along with the fall in prices which prompted purchases. Gold imports, in fact, contributed to a large chunk of the trade deficit. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you'd like us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.